All right, guys, so thanks very much and welcome to the next video. In this video, I want to talk about, again, my favorite subject, Bitcoin. And in this video, I want to show you the chart that I think all Bitcoin doom and gloomers need to see. When I talk about Bitcoin doom and gloomers, I'm talking about the sort of folks out there who think that Bitcoin is going to go all the way to zero, okay? Now, I'm not one of them, but I'm sure you've met plenty of people in your life who've said to you that, oh, Bitcoin is going to go to zero, is going to go to below $100. Guys, the reason they probably will say this to you is say, oh, well, Bitcoin has dropped by 90%, 85%, you know, it's destroyed, it's going to get all the way to zero. You've probably seen articles. Guys, if you ever meet someone like that, you know, a Bitcoin doom and gloomer, show them this video, show them this chart I'm going to show you in a few moments. The first chart I want to show you is something that you see right here. This is a chart that you may not actually have seen before. Now, if you're more of an advanced professional trader, investor, you might have seen this. This is actually a chart of Bitcoin that actually you might think, well, hang on a second, where is this 85, 90% crash in Bitcoin I've been told about? Well, that's because what you're seeing, guys, on this chart is a logarithmic scale of Bitcoin. Sometimes you don't see this, but what you have to do is essentially set your chart to the logarithmic scale or log scale. It's very easy to do. You can do it, for example, easily on eSignal. It's very simple to do. But bottom line is this, guys. The log scale or logarithmic scale of Bitcoin, what it does is adjust the price to show you essentially what's really going on, you know, in the big picture. Show the long-term trend and also the short-term trend. So I'll come to this point in a few moments. But bottom line is this. Let's go to the next chart just for a few moments. Look, this is, again, this is also a log scale chart. This is a logarithmic chart, but on a daily time frame, a slightly lower time frame chart. And yes, it is true that the crash we've seen in Bitcoin, the downtrend we've seen in Bitcoin since 2017, the highs of 2017, certainly has been devastating. It's a terrible downtrend, without a doubt. But also, when you look at this chart, you see that this downtrend is composed of 5 waves. I'm a great believer in Elliott wave theory, and our Elliott wave count shows to us that there's been a probable 5-wave downtrend on this time frame, as you see, on this daily time frame. And indeed, it's very likely that the 5 waves have probably not yet completed. It's likely that we're still in the 4th wave. We haven't yet completed the 4th wave just yet, the wave 4. And it's likely wave 5 will eventually potentially come in the next few weeks or maybe the next few months. But bottom line is, on this time frame, on the lower time frame daily chart, we can see a clear 5-wave move, a downtrend, a clear downtrend in the price of Bitcoin. But again, what's interesting about this is that if we zoom out and go on a higher time frame, if we just leave that for a moment, if we zoom out, guys, and go on a bigger time frame chart, and I want to show you this. Let's go to the next chart, guys. This is the monthly chart. This is a much bigger time frame chart, going back all the way to 2015. Again, logarithmic scale. And we can see that the crash we've seen since 2017 is probably nothing more than a correction, an ABC probably type correction that you can see right there. And again, it's likely that we've not yet completed that correction just yet. I actually think that there's still another move coming to retest the lows before we finally complete this corrective move. But bottom line is this, guys. Different time frames, if we just leave that for a moment, different time frames can give us different perspectives. Why? Because each time frame will have its own structure. Each time frame, whether it's a monthly chart, for example, will have a different price structure, different market structure than a lower time frame daily chart. This is what many folks don't understand. You can have one wave count on a different time frame, a higher time frame, and a different wave count on a lower time frame. For example, the structure of the chart on a daily chart will no doubt be different from what you see on an hourly or 5-minute chart. Why? Because different time frames, different market structures. Okay, so always remember that different time frames will give you different price structure and therefore different wave counts. Perfectly possible, perfectly probable to have a correction on a higher time frame, but perhaps a much more destructive downtrend on a lower time frame. So bottom line is this, guys. This is the chart that I think, we just go back to that chart of the last one. This is the chart that I think every Bitcoin doom and gloomer needs to see. All right, guys, thanks very much. And guys, if you like this video, give it a thumbs up, and so please subscribe for future videos. Thanks a lot.